going to talk about U.S. stocks. Stocks, marginal new highs. Best quality stocks are breaking out to the upside like Apple. Mediocre stocks like the Russell 2000 are at the top of ranges and are very dangerous. Weak stocks like Grubhub are absolutely crashing. They dropped 40% yesterday, and it's this kind of weak, low conviction market that really marginally rewards the outperformers and absolutely destroys the non-performers. That's a classic market topping indicator. It all adds up to marginal new highs with the major indexes with little confidence or excitement, a classic topping indicator. Trading volume is falling in up markets. That's always bad. Bottom line, marginal new high and then another 7% correction for the next 3 months. Then new highs propelled by ultra low interest rates and an eventual China deal. Bill, I got a chart for the S&P 500. We've been very reliably making money on this, both on the bull and the bear side. Tell me what you think here. How much more upside do we have?
Well, I have targets higher in the market right now, but the million-dollar question is, do we pull back before we go up there? That's the question. And my reservation, of course, and as always here, is that the VIX is back down to its long-term support level.
Right.
So, I am expecting a bounce here in the VIX, which would pull the market down a bit. I don't see the market ending here, okay, or I should say the bull market ending here. Okay, I think a pullback would be still a wonderful opportunity to trade a leg higher.
Right, okay. What is your upside target?
I'm up to 3,100, about 310 on the SPY.
310 on the SPYs, okay. That's about 3%. It's not a lot. It's kind of falls in with my own scenario. Dow average hasn't broken to new highs yet. That's because it has a huge drag from stocks in trouble like Boeing and General Motors. Russell 2000, absolute at the tippy top of its range. And actually, if you take this chart back 2 years, it's been failing at exactly this level for 2 years. We got out of our short position right here on that one down day. And thank goodness for that. NASDAQ, it's really hard to tell if it's an all-time high or not, but it might be exactly matching it here. All very high-risk territory for traders. VIX, as Bill correctly pointed out, we're back in the dumps, back down to the 12 handle here. We could chop around here for a few more weeks, gonna get a pop in VIX, sell off in the market. That'll be your chance to sell the VIX, chance to buy stocks for a year-end rally, which could start in a couple of weeks. Microsoft, yeah, new highs, 146, then gave it up. This is the #1 favorite stock in the market. You can see we've been playing it from the long side all year, looking for another dip at, sort of, so to speak, to get back in. Facebook, kind of grinding in here, trying to put on the bottom, and it may actually break out of here and go to the upside. Apple, new all-time high there at 250, gave it up very quickly. I would wait for a bigger dip. The old breakout point was 225. If we can get back to 225, I'd be a serious buyer of Apple there. Alphabet is probably the best growth prospects of any of the major FANGs. Big buyer on dips here. Amazon kind of bouncing along a bottom. I don't really like this. It can't get over the 200-day. They just put out a horrendous forecast for Christmas sales. Let's see if that actually happens. If it does, it could be the beginning of the next recession. Oh, and they just lost a major contract on the AWS to Microsoft, and that seems to be politically determined, so that contract will end up in court for sure. PayPal, trying to get off the bottom here, just broke the 200-day. NVIDIA, off to the races. Same for Micron. Salesforce, still in a sideways range. Boeing, here we are. Caught the this dip. I got the next day off of that low to 325, and I think we may chop a little bit sideways, and then we'll just take the max profit on our current call spread. It's actually the 300, 310 I have. I didn't update these numbers here, so let me make a correction on that. Walt Disney, the streaming wars are really starting to hurt all of these stocks except Apple. You saw Sony pull out of the streaming business because the competition is getting so fierce. So if Disney drops any more, I would think that's a serious opportunity to get in on the long side. Adobe sitting on the lows, but our call spreads expired at max profit, so that worked. Industrials at the highs. U.S. Steel finally crawling off a bottom. Looks like it may not go bankrupt this year, but maybe next. And Walmart, we took a small profit on our short, and we're out of the stock completely. So I need to update that short. Sorry, when you have fire raging on all sides, you don't get time to do everything in updating your charts. Macy's, yikes, just doesn't want to do anything. We get another major rally back up to 17.5, I'd be selling. Bill, you following Macy's at all?
No.
Yeah, are you buying down here? I mean, it just the daylight's beat out of it in just 3 months.
Listen, I'm kind of on your side in terms of what you said before about these retail REITs. I mean, if you look today at most of them, they're getting hammered. And Macy's is quite frankly a retail component, so I would avoid it.
Yeah, it just seems. Do you even go to Macy's yourself anymore?
Well, first of all, I don't want to fight the traffic. Okay,
right.
I've become an Amazon guy, so no, I get to answer your question. It's easier to press a button than to go to a major mall where they're located.
Yeah, me too. I mean, for me, just to go to the local mall and come back, 2 hours round trip minimum, including a half hour to find a parking space. So, ironically, nobody buys anything at the stores anymore, but the parking lots are all full. Maybe they're just all looking at the stuff and then going home and buying it on Amazon.
Or eating at one of the 50 restaurants now in these malls.
Yeah, or gyms or movie theaters, the other stuff.
Yeah, that's what they've become now.
Yeah, I have Rick just commenting on Sony coming out of their streaming service. They're giving up 300,000 subscribers. It just doesn't even move the needle compared to Netflix with hundreds of millions. So yeah, the competition in there is going to be fierce, and you need a couple $100 billion in order to compete. Kevin is asking.
John, let me interject one thing about the retail.
Yeah.
Okay, if you're looking to buy retail, the one stock that I think is still really an attractive trade is Target. Okay, that's the strength, right. And they seem to be clicking on all cylinders.
Yeah, Target is one of the very few that seems to be moving fast enough to survive this retail Armageddon. And I do go to Target, by the way, to buy girls' clothes. Nothing for me, thank you. Here's another question from Kevin. What does it mean that Chile APEC summit is canceled? What is now Trump and due for a signing for a trade deal? Answer, there may not be a trade deal. It's another postponement and could be another trigger for a sell-off, long overdue sell-off in the market. We've basically been going up nonstop now for 2.5 months, and almost everybody's market timing indicators are saying extreme overbought here. Okay, let's finish up with the equity charts. Okay, Tesla. I put up a 2-year chart on Tesla just for fun to show you. First of all, my major support at 180 held perfectly. We caught the long side, took profits on that. But we're back up to the old highs again. We only were $50 short of a new all-time high right here. So I would be more of a seller of Tesla stock here just for a trade. The good news is out. Car sales did fall in the third quarter, and it's because of a one-time only profit in the stock, only the third in the company's history. And almost all of this is short covering here. The shorts have been burned yet again for the umpteenth time in Tesla. What do you make of Tesla here, Bill? Are you a short seller up here around 360?
I'm inclined to agree with your logic here. I think it's gotten kind of overbought in the short term. I think if you're trading it, I would look for one quick leg up and then the big sell-off here.
Yeah, the no-brainer here would be something like a 410, 380 put spread. We've done that before when it was up in this territory, and that turned out to be a good moneymaker. Okay, Delta Airlines recovering. This is the non-737 user. Transports look like they're at all-time highs. Transports often play an important leading indicator in the markets. Bill, what do you think of the importance of the transports, and what's this chart telling you?
No, I agree with you, but they've been very strong, okay, and they may be getting a little bit overbought at this point, so I would be careful about, speculating on the long side right now.
Yeah, I'm getting that.
But then again, let me throw out another caveat. The other caveat here is that the market itself is to me, very overbought right now.
Yeah, right. I would agree with that totally. I got a question here. Will there be a replay of this webinar posted? Yes, we always post these on the website under your product categories, under your membership area, but you have to be logged in to get in order to access it. We need about 2 hours to edit and render this thing, so should be up a couple hours after the end of this webinar. Okay, that's weird. It's going backwards now. You never know, these Apple upgrades can ruin your life. All of a sudden, all your apps stop working. Okay, Goldman Sachs also at the top of the range, and I would say this is like in my category of medium quality stocks, which are at the top of their ranges but not able to break out. Palo Alto Networks at a 3-month high. We always love buying this on dips. Hacking never goes out of fashion. In fact, the number of cybersecurity companies is probably going to increase as the business grows exponentially. Consumer discretionary also moving in a sideways wedge. Bill, what would you do with this chart? Let's just say you took the name off of it. What would this chart going to do?
Well, it's obviously kind of consolidating here. I mean, I would wait for it to get a lot quieter and then look for the breakout or breakdown. Mm-hmm. It's almost a perfect triangle, by the way.
Right. There are a lot of stocks like this in the market too. Okay, moving forward. Europe has had a nice rally on a strong euro and the potential end of Brexit. Japan, monster rally there off weak dollar, and same with emerging markets. I hope all of you found this helpful, and hopefully it has also improved your trading. This is John Thomas, the Mad Hedge Fund Trader, signing off for today. Good luck and good trading.